Yeah, I guess the question is going to be how short term is it, right? Obviously, it was a tragedy. Somebody's passed away. You have 10 people in the hospital. That number could expand in the coming weeks. So yeah, I guess it's going to depend on when customers are going to feel comfortable going back to McDonald's. We think that some negative sentiment could linger. Obviously, this company has gotten ahead of itself in terms of pricing, and customers, especially low-income consumers, have pushed back by visiting less this year, and so. I think the timing of it was kind of bad. In terms of where the stock's at, I mean, the stock's been ripping higher over the last couple of months. It makes us think that they finally kind of hit on value and we're able to attract people back with this $5 meal in the last quarter, right? But with the stock near all-time highs, man, that's I guess that's a decision investors are going to have to make today.
So for the next earnings report out of McDonald's, do you expect any type of hit either to the sales or any earnings metrics that has to do with this E. coli outbreak news?
So this is going to impact the fourth quarter. So we think this is going to have a meaningful impact on the fourth quarter, and it'll probably bleed into early 2025 as well. We think traffic and same-store sales are going to get a hit because, I've been on TV 4 times already today. I'm sure all the major outlets are covering this story, and so it's going to turn a lot of people off from McDonald's, and I think there's going to be a lot of people out there that just may not feel safe eating in their local McDonald's. So I think it's going to impact sales and traffic and earnings for at least a few quarters.
And Mike, aren't the vast majority of McDonald's, aren't they franchised versus company owned?
Yes, yeah, they're 96% franchised. So yeah, the largest impact is going to be to the franchisees. That's a great point, Paul. Franchisees are going to suffer the most, because McDonald's is so heavily franchised. They'll take a top line impact, but there's less operating leverage in that model, right? And so because of that, their earnings aren't going to get hurt. The last big example of this was Chipotle. Chipotle owned all their stores. Yeah. And so when their same-store sales dropped 20% in 2017, their margins got decimated, right? Because there's just a lot more operating leverage in the model. So, for that reason, there's a lot less risk to the McDonald's story in this case versus what we saw with Chipotle back then.
So, Michael, Paul said that he's been ordering the same thing from McDonald's since high school. I imagine that when he first
and that's going back.
Ordered it, maybe the burger was $2.50. I want to talk about pricing, though. How is McDonald's doing right now with being able to raise prices with a consumer that is kind of constrained by higher interest rates and inflation right now?
Yeah, it's not just them, it's all of the restaurant industry, but especially quick service. 30% of their transactions are made by low-income consumers, and there's this K-shaped economy, right, where if you own assets, right, if you have a lot of money in your 401k and you own a house and, you're doing pretty good, right? But inflation has squeezed the hell out of low-income consumers now for 4 years, and they're just shopping at the grocery store more often. They're cutting back on their visits. They're cutting back on their checks when they do go to the restaurants, right? And so McDonald's franchisees, because they're the ones that set the pricing, and everyone else in the restaurant industry is struggling mightily to raise prices on their consumers this year. And and the rising, ever since the 50 basis points cut, commodity prices have just gone up since September when we started pricing that in, right? And so that's a big concern for restaurateurs, I think, in 2025.